What's up guys, and welcome back to my YouTube channel. My name is Saman Habibi, your real estate agent for the Durham region. I'm a full-time agent here in the Durham region helping investors and end users navigate this crazy market. Today, we're going to be talking about what's going on in the market and more specifically looking at May data, doing a comparison to prior month and doing a comparison to the peak of the real estate market in February 2022. If you want to follow more of my content, feel free to access my socials here. I'm more active on Instagram and on Twitter. And if you have any questions or want to talk about a specific scenario that you're involved with, feel free to access my calendar and book a call with me right over here. All right, guys, as we know, the market is shifting and it's shifting fairly quick. We are heading towards a balanced market, which is something that we haven't seen ever since the pandemic started. It's essentially been a buyer's market where it's been extremely difficult for buyers to get out there and make a purchase in the sense that competition's high, inventory is low, but now we're starting to see that shift. So what we're going to do is we're going to look at May numbers, we're going to do a comparison to prior month, and then we're also going to do a comparison to the peak of the real estate market, which would have been February 2022. So let's jump right into it. As of May, the average house in the Durham region was worth $995,000. That would be down 7% from the prior month, and that would be up 10% year over year. And now if we look at Oshawa, as of May 22, the average house in Oshawa was worth $844,000, and that would have been down 10% versus April 2022. Now, the reason why I bring up Oshawa, although this is a Durham region update, is because Oshawa remains to be the most affordable town in the Durham region. If we look at the map over here, the Durham region consists of Pickering, Ajax, Whitby, Oshawa, Clarington, and then we have Uxbridge, Township of Brock up north, and then we have Scugog, which would essentially be Port Perry would be the main area to focus on. I find that when end users and investors come to the Durham region, if they're restricted to a budget, they're likely going to be looking in the Oshawa region. Same with investors. When investors come to the Durham region, they go to Oshawa because it's the most affordable. But if you have more of a budget to play with, you're typically looking at Pickering, Ajax, Whitby, as you know, commuting to downtown seems to be more reasonable when you're closer to the GTA, which is why Pickering, Ajax, Whitby always trades at a premium. Now, if we do a quick comparison to what Durham and Oshawa was trading at versus February 2022, Durham region versus February 2022 is down 19% and Oshawa is down 23%. Now, Oshawa would be a more dramatic decrease since the peak of 2022 of April, and that's because I find that a lot of speculators and a lot of investors go to the Durham region because it's where they are able to afford a detached property to purchase. The typical investment strategy here in Oshawa is essentially purchasing a wartime bungalow built in the 50s and 60s and doing a duplex conversion and changing it from a single family home to 2 units. And this has been very popular because you're able to purchase these at an affordable price, put in a 100K renovation, and then you're able to increase or force depreciation up by $120,000. So I find that Oshawa has dropped the most because investors who are essentially making a decision strictly based on numbers, based on economics, are sitting out and they're deciding not to engage in the market because of the uncertainty in interest rates and the increase in inventory. Now, the other thing I want to mention is days on market. So throughout 2021, it was very evident that properties were selling fairly quick. It wouldn't be crazy for a property to go on market on a Wednesday, Thursday, 2 days of showing during the week, 2 days of showings on the weekend, perhaps another day of showing on Monday, that's 5 days, and then have an offer date on Tuesday or Wednesday and essentially sell. So that would mean that the days on market, essentially for the most of 2021, was approximately 5 to 6 business days, maybe 7 days in total. That number has now increased. So days on market right now for the Durham region is 15 days, and that is also the same with Oshawa. And this number captures performance days on market, which means if that same property was listed for, let's say, 4 or 5 business days, sorry, not business days, just days, and it didn't sell, and it was relisted, but then the relist took, let's say, 8 days or 9 days or 10 days to sell, this days on market captures days on market for a listing that hits the MLS per the address. So 15 days is very accurate because it captures any terminations that would have happened or any suspensions, and if that property came back on the market and sold. Now, it's important to say that 15 days on market is in fact the highest number of days on market we've seen in the last 12 months. And if we even go back further, it's probably still, on the higher end as well. So that tells me that a lot of buyers are not rushing to the market. They're, waiting to see how properties perform on offer night. Do they sell? Do they not sell? Do they get relisted? Does the price change? So people are patient and waiting to see what is going to happen. And patience is a key factor as to what's going on in the market right now. I'm finding that end users and investors in the Durham region are essentially waiting to see what's going to happen or how things are going to play out with the interest rates, and how is the market going to adapt the new interest rates. So, speaking to my own clients, if they're going to put out an offer on offer night, they're not being aggressive. They're putting on a financing clause, an inspection clause, and oftentimes these are getting accepted and they're not being discarded, which is good to know. It's, in my opinion, this is a very good way for new buyers to essentially navigate the market, and that is essentially understanding the risk, identifying and being able to mitigate it with these clauses that protects them. The other thing I want to talk about is the average sales price to list price. So we know that throughout the pandemic and throughout 2021, people were listing properties super low, and they were getting offers, 100, 200, 300, 400K over asking price. And that percentage increase or the percent that you pay over asking price is a data point that we track. For February 2022, which would have been the peak, that number was 129% of listing price is what properties were selling for. Now that number has decreased to 108%. This is really important to note, whether you are a buyer, whether you are a seller, whether you are a realtor, is that this has an important factor when it comes to the mindset of looking at prices. So whether you're a real estate agent going to list a property, you need to be aware that whatever you list at, you are probably going to get 108% of asking price versus 129% of asking price. If you are a buyer, you should not assume, but understand that 108% of the asking price is perhaps where you should be. And of course, that is up to debate based on comparables in the area and what that property has to offer. But it's a cool metric to follow because we are seeing that decline in average sales price to list price. Now, what we want to do is we want to quickly look at the Durham region in general, look at all the different municipalities and towns that are here on the chart, and we want to see how they're performing month over month. As you can see, Ajax is down 7%, Township of Brock is up 23%, but that's because the May numbers includes a few outliers. I believe there was 2 or 3 properties, unique large properties that sold at a very high premium. But if you look at the rest of the market, Clarington down, Oshawa down 10%, Pickering down 3%, Scugog down 10%, so on. So across the board, we're seeing a drop compared to the prior month. And then this is where, the big shock happens, essentially doing a Durham region comparison of February 2022 to May 2022. And as we can see, Oshawa and Whitby have the biggest decrease since the peak of February 2022. And I did mention that Oshawa, I believe that's seen the largest decline, and that's because a lot of investors and speculators are in Oshawa. And then in terms of Whitby was seeing a big growth because essentially we can argue that a lot of people who were tapped out of the market when it came to Pickering and Ajax were going to the next town over in the east, and that would have been Whitby. Whitby remains to be attractive because it's on the 401 corridor. The GO station is on the 401 corridor, and Express GO train ride from Whitby GO to Union Station would be anywhere between 40 to 50 minutes. So it makes commuting to downtown, if people are working downtown, a lot more manageable. And hence why, that's the reason why it's been such an attractive place and why it had increased so much. And as a result, that's why we're seeing a bit of a pullback in prices. Now, what I've done here is I've also broken down each type of property. So we're looking at detached, semi-detached, townhouses, condo apartments, and link homes. And we're doing a comparison between April to May. And as we can see, the detached properties, as expected, are down the most, and then townhouses are down the least. Now, what I want to point at, a shocking stat, is doing that same analysis, but looking at this would be February to May 2022, and we see that semi-detached properties are down 24%, which is a big shock. Something else that I want to point out here is the big price difference between detached and semi-detached. If we look at prices for detached in May, they're just over $1 million at $1,094,000, but then the semi-detached properties are valued at around $812,000. They're actually cheaper than a townhouse. So you gotta, what's important here for perhaps for first-time homebuyers to consider is that in the Durham region, you would purchase a townhouse for $907,000, and a townhouse would mean you're sharing two walls with two different neighbors, unless you're a corner unit. With a semi-detached property, you're only sharing one wall with one neighbor. So in my opinion, if we look at the Durham region, the best bang for your buck is going to be the semi-detached properties. Why? Because they are freehold, they are cheaper than townhouses and semi-detached houses. And when it comes to dealing with neighbors, you're only dealing with one neighbor versus two neighbors with a townhouse. Now, we quickly want to take a look at the rest of the GTA and how the rest of the GTA is doing when we look at month over month. As you can see, we have Halton, Peel, Toronto, York, Durham, and essentially everyone's down month over month, and then Durham region by far getting hit the hardest. We can argue that prices for the Durham region did increase quite heavily throughout this pandemic, and that's because what we noticed was that a lot of out-of-town buyers, so people who were shopping in the West End, who were essentially being maxed out of the West End, were coming to the East End, and they were doing property comparisons between the East and the West. And if you can purchase let's say a semi-detached townhouse or semi in Mississauga for $1 million, but then you can purchase the same thing in the Durham region for $800,000, then people were looking at it, were saying, well, let's go to Durham region and let's pay a premium in the Durham region. We're still cheaper than the West End. And when we look at all the different factors in terms of infrastructure, so highways, hospitals, commute to downtown, it is pretty similar when you look at the West End versus the East End. So that was attracting a lot of buyers to the East End. And then if we take a look at the peak, February 2022 versus May of 2022, we see that every municipality is down with the exception of Toronto. Toronto has remained fairly strong, and I think that has to do with the fact that location's key. Properties along the subway are doing really well. Condos and apartment buildings are also doing really well and keeping Toronto prices higher compared to the rest. Now, since we are talking about the Durham region, I want to talk about and give some content towards our investor clients. One of the main properties that investors are buying in the Durham region are the duplex properties. So these are properties with 2 units that can rent. So if we take a look at this property, this is a property in Oshawa, a legal duplex in a really good neighborhood, and essentially, this property traded on the MLS for $955,000. If we take a look at initial cash required, so that would be the 20% down plus some closing costs, the initial cash required would be $210,000. This property can bring in $4,000 in rent, and the total expenses on this property would be $3,961. Our total expenses would include mortgage, taxes, insurance, maintenance, and vacancy reserve. So this property would leave us with $39 at the end of the month as cash flow, which is not great, but that return on investment would be approximately 8%. And that return of investment is calculated by taking into effect mortgage paydown, cash flow, and 0% for appreciation. Now, let's do a comparison to what would happen if you had to purchase this property that was not turnkey. So you had to purchase a bungalow that required the work. So a rehab investment property would have been $700,000. Again, this is a number per MLS, per a recent comp. The property would have required $120,000 to bring it up to a legal duplex standard. The after repair value, we can assume similar prices at $955,000. The initial cash required for a rehab investment would be $289,000, and that would account for your 20% down on the $700,000 plus your $120,000 renovation plus some holding costs. After we refinance the property, cash left in the deal would be around $109,000. I'm going to argue that because we have a nicer property, we can demand slightly higher rents. So we've put the rents at $4,100, total expenses at $3,998. Cash flow is not great, it's $102 a month, but then our return on investment is 17%. And that's because that forced appreciation allows investors to pull money out of the property via the refinance strategy. Now, what is really important to note is that the risk lies in the after repair value, or what we think that the property is going to be worth. And it's not just us, but what the bank thinks that the property is worth. This is essentially risky because as time passes by during the renovation phase, there's a chance that the market is going to pull down. And if the market pulls down and comparables are lower, then that means that the after repair value or the refinance amount perhaps is not going to come back at $955,000. So this is really important for investors to keep in mind. It's essentially a question that you have to ask yourself: are you comfortable leaving $289,000 in the property if it did not refinance? If you are, great. I think one thing you have to kind of keep in mind is that what is your time horizon to not take that money out? You can perhaps argue that you may not be able to refinance next year, but maybe the year after, or you just have to be comfortable with the fact that you're not going to be able to refinance and you need to keep the money in this property. I think the point we're trying to make here is that if you're not comfortable with that risk, then you're perhaps better off considering that turnkey investment and perhaps being comfortable with a lower return on investment. But this is real estate and there is risk involved, so you need to essentially stress test the property and essentially purchase it at a point where you're comfortable holding on long term. Now, if we do a further stress test on the property, and let's just assume that refinance or the market does take a 10% hit and the property is only worth $850,000, let's say in 6 to 8 months, what does that do to our numbers? As you can see, the cash left in the deal after the refinance would be $193,000. Our cash flow improves to $486, and then our return on investment drops a bit. Guys, keep in mind that the cash flow does include two non-cash items. That's the maintenance and vacancy reserve, which is a reserve that I advise all my clients to keep in there in the event of a rainy day or in the event that a repair comes up. You want to be able to have some money put aside for those events. All right, guys, thank you very much for watching yet another video and coming back to the channel. I just want to say that I do need your help. I do need you to like, subscribe, and turn on the bell notification button. Drop a comment so we can talk about any questions you have, and perhaps this video gets to more people who need to learn and discover the Durham region.